What's going on, guys? It's Josh Answers here for the Trading Fraternity. It's June 15th, 2016. Thought it was going to be a way more exciting day. Had the potential to be. Did not turn out to be so. We had the rate rise. I hope you guys enjoyed the title. Thought I'd spice things up, get you guys a little excited with some clickbait. That's not actually what Yellen said. I will clarify. But it was a pretty slow day, so this is gonna be a fairly quick video. Besides these questions, I'll start with that and answer some of the questions from yesterday's video. Ashley Shim, another shout out right off the bat. Hello. Brian says, hey man, love the videos, trade options well. Hopefully next time we can chat TTF. Question about Brexit. Obviously, so far people are voting to leave, but do you think when people wake up in the morning and realize their investments are going down, they would vote to stay again? If Brexit goes, all European banks are in trouble and their economy is screwed. So what I'm saying is if there's a change of heart, will EWU rally? I hold calls on EWU. Sorry, I'm typing on my phone. Might be a little, yeah. Well, two-parted question. One kind of interesting how he goes from bigger picture. Does this mean the stock will rally? And I looked at EWU, the United Kingdom ETF, and sometimes those ETFs won't respond. So that's why it must make that distinction. But as far as the Brexit goes, I don't think that's something people just wake up one morning and realize. There's a lot of thought, a lot of consideration. So I don't think there's going to be a huge just swing unless something was massively unaccounted for in the polls. But as far as the value dropping and people saying they're going to lose their savings, Britain's already kind of detached. They already have the pound alone, so although they're in the European Union and it's a lot of politics and it's a new generation behind it supporting it, so anything could really happen, and some people are saying the effects might be muted, so never know. They may be very incentivized to do so. Next, Coulter Allen, you mentioned Monsanto. Do you seem to think a deal will be struck, or will they just be stuck at this impasse? Also likely just talk, but do you agree with others that they think that Twitter's potential acquisition target? Start with Monsanto. I think there will be a deal struck. There is certain factors that I'm looking for that Bayer and Monsanto have already discussed, and I think at this stage they're waiting for regulatory approval. If we see regulatory approval or some sort of confirmation on Bayer's end that they could get that, then they're going to discuss about a higher price, and then it could go through. So I could see us at this impasse for a while. Do I see the buyout happening? Is possible, probable. I don't think it's unprobable, but I don't think it's highly probable. So, but I would say it has big implications, and if the Bayer DuPont deal goes through, and amongst other things, there's a lot of reasons why it can go through, and just as many reasons why it can't. So, but I would say I do think a deal will struck. Timing, no, that's hard to say. Blackbird about China, I read this earlier. Yeah, we got that. The MSCI, I didn't talk about it too much. It wasn't that big yet. And the LinkedIn one, I will explain in more of these videos. JK, hey, Answers, Jose Madrid. I see there's a lot of uncertainty with the Brexit and Fed's position, but what can we expect for the markets later down this year? Will these events be the outlook for the second half? There is a lot of, the Fed kind of clears things up. We're going to talk about what Yellen said, but and that kind of paints a little bit of the picture. But as far as the Brexit, it has the potential to be those events will be the outlook. Essentially, if the Brexit doesn't go through, you're not going to hear much about it. It'll kind of fade like grease, and they'll handle it. Or it could go through, and then there could be some violent downturns, and that could start setting precedents and the directions of things. But hope that answers. Oh, I didn't answer Coulter Allen's about the Twitter being a potential acquisition target. I think they can, but I'd be shocked to see who buys them. I think it's, again, possible but not probable, but that I think it'd be cool. I think they have valuable, but as far I really can't see who would buy them, and there's a lot of risk in a social media company like that. But so again, possible but not probable. I'm not even in it. I'm just watching. So interesting to see. Hopefully they could do good. So I would love for them to get things together and buy some long, but I don't know if that's ever going to happen. But anyways, we'll talk about what happened today. Today was supposed to be, it could have been a very monumental day if they raised rates. They didn't. Janet Yellen did. I hope you guys, again, like I said with the title, she didn't necessarily say that. She did say something similar, but pretty much as we saw, the main point of what went down, interest rates stayed the same. Janet Yellen talked about it. I'm not going to talk about everything she said and the reasons why. If you want to do that, I encourage you to go to the Federal Reserve and read the minutes, or go listen to one of her press conferences. But you can just read the minutes that they put out, the forms, and it really puts everything in writing about what they thought about jobs. But she thought the jobs market, that's the one thing I was looking for. That's really what I'm going to discuss here. The two important things I was looking for was what she was going to say about the jobs report, because we are coming off one of the worst jobs report, I think, since 2009 or 2007. So I wanted to see what she would say about that and how that affects overall Fed policy moving forward, and if it affected their decision today. And then also wanted to see her opinion on Brexit. So as far as jobs, what she said, don't overreact on jobs. She said we need a larger sample size. We can't just react on just one of these reports to make our decision. So there's that, and I thought that was pretty interesting. She said, chill out. But then the other thing about Brexit, she said it could have serious economic consequences. And this was interesting. I thought she didn't really discuss it too much, the Brexit, but, brought it up a little bit, but just said it has the chance to be bad. And there was something else I was going to bring up, what she said about the economy. That's what the title is about. And it was related to global weakness. What she did say was that global weakness is still there. It's the same as before. She said markets have digested it better, and markets are really acting as if it's not there. Markets are pricing in as if the markets have no weakness when there is. That is what she said. You could go listen to what she said during the press conference. And by her saying that, she said, that investors' appetite for risk change abruptly. Meaning there's a shock, and I think she could have been alluding to the Brexit. That could make people quickly turn from everything's fine, spies at 210, to back to risk assets off, take everything off the table. And those of you who aren't familiar, risk assets are the ones, risk your assets, buying things at a premium, some would even say buying real estate. I love real estate, don't get me wrong, but some would say, buying real estate at a high could be an asset. Buying anything during a bubble and paying a high could be considered a risk asset. And when people go risk off, you're not going to see a demand for people willing to pay too much over true value. So that was that, and that kind of explains the title with that. And that was it. And then last thing, she kind of outlined the future, 3 hikes in 17 and 18. There were some good questions asked about why they decided to change and why it's kind of dropped the full percentage. And she's given answers with inflation and kind of just the pace of stuff. So it's very interesting to see them slow down the pace and get very, very bullish and lowering expectations really, really low right now. So that's pretty cool. But so that was that. Getting into other stuff, the main thing that happened, there was a CoreLogic buyout, or QLogic, excuse me. They got an offer from Calvium, I believe, is the name. Cavium? Yeah. I'm blind. Cavium. Cavium, whatever. They got bought out for $16 a share. It's like a 10% premium on what they were going for. I didn't think it was that big of a deal. What I did, though, I did talk about buyout season, and we're seeing that more. And I did talk about semiconductors. I said keep a lookout for those. We brought that up, so it's interesting to see this is in that space. And so I don't know if I would be surprised to see another bigger type of deal go through. This was a little smaller deal on my end, only $1 billion, but very interesting to see. Another thing that came out a little later today, FireEye. FireEye, cybersecurity company, they news reports came out that they've had talks for a buyout offer and that they rejected offers, and they said they want up to $30. They said they won't take anything less than $30 pretty much. So interesting situation, kind of like Perigo, but different because we're actually just getting the response, not just the rumor. No one really knew about these buyout talks, but interesting in the sense that it's trading substantially below where its IPO or where it had a chance to pretty much exit, and now there's another offer on the table for lower. So very, very interesting to see with FireEye. I'd keep my eye out for that. They have pretty god awful financials, but you know, very interesting on the buyout sense. Another thing people talked about today, I tried to find a correlation with the stock, and this is one of those events to show how, was the alligator, the Disney alligator. Sorry to laugh and sound so insensitive about the 2-year-old who got dragged in swooped up by this alligator in like a foot of water. It happened at a Disney location or like right next door or something like that. But yeah, some people would have expected. I've had people ask me, "Oh, would that have an effect on the stock?" Not necessarily. Again, it wasn't really on the fault of Disney, and it goes to show, you'll see the resilience of stocks, and that although a death did occur, and deaths can often bring stocks down, especially when related to a publicly traded company. But in this case, it didn't really do much. The stock did close down, but it was actually up for most of the day. So there's that. Another thing to watch out for tomorrow. Today, even too, you're going to see it at 7 p.m. Pacific, so 10 p.m. Eastern. You're going to have the Bank of Japan. They're going to announce their interest rate decision and what they're going to do. So that it could have a really big effect on the market. That's really what you're going to see make the markets, with the futures dip or rip before market, and today and even in after hours you'll see the futures. But then also there's the Bank of England, or the Bank of Europe. They're going to have their interest rate decision at 4 a.m. tomorrow. So there's that. They could raise they could actually cut and add more stimulus, and some may even say that's what the German bond thing can allude to. But that we talked about yesterday with the negative yields, but it's something interesting to watch. These two events will drive the market. These are the next two events on the plate that people are looking at to drive the markets up or down, leading into the Brexit decision, and that's what people are still reacting on. But there's the rate hike, and it seemed that gold and Bitcoin, rallied off of that. Gold is touching near 1,300, so I keep my eye on that. If it does get above that and stuff gets a little more interesting, I pay attention for gold and that next leg up. Next, this is another thing. I saw this on Zero Hedge, so pretty interesting. I couldn't find it. I did not look at the futures contracts, but I did look at the currency itself. But the Nigerian, let's see, Naira, or I'm not sure how to say it, but let me refresh this. But they pretty much, supposedly their futures contracts just dump like crazy, and it's pretty much, people are alluding that they might go to a floated exchange, kind of what we saw with China. We saw similar stuff with Russia in 2014, and really this is a first step to usually a bigger part of a currency crisis. So it'd be interesting to watch. If you guys aren't interested in that or think it has no relation, it may not, since Nigeria's, this happens with many currencies. The less significant economies don't have that big of effect. If that happened on your euro or Great Britain pound, people would be flipping bricks, but you never know. So just keep that on watch. Next was, I guess to wrap it up, looking at some plays and to see what happened and what kind of developed today. Whole Foods, I didn't think it'd do much, but it actually went down another 5% today. You look at the 100-day chart, it looks pretty gnarly. I was not expecting to see that. It really sold off on good volume. It does not look like a good look. It was really the last thing I was expecting. So if this keeps developing and there's no more news reports, it looks like the market's really taking it serious. So that could develop into something big. So I would watch out for that. Just that'll be interesting to look out for. But that's pretty much it. I hope you guys enjoyed it. Let me know if you guys have any questions. Just put them in the comments so I can answer them, or send me an email. Preferably comments make it easier so when I start the video. But subscribe to the channel. I hope you guys have a wonderful week. Good luck. God bless you.